Hmm. Hmm. Are we live? Where's the face? I did. Oh, there it goes. Okay. So, welcome back to this week's top 10 dividend stocks going ex-div next week. We do not see any comments. Again, I did notice at the end of the stream we were having, I guess, like a slow lag connectivity, so I'm assuming that might have been the issue.
People may have said,
Screw that, we're not watching because of crap.
their text,
So anyway.
their text sucks.
Yes, that's a setting issue because I'm tech challenged. But anyway, so if you do have tickers you want us to go over, drop them in the comments during the live stream. And if you're watching this after it's live, go ahead and throw them in the comments and we will do them at the first thing of the next episode. So without further ado, skis, we are going to jump over to the stuff for the week. So this resets?
You need to refresh it. Saturday to Saturday.
Does it... Wait, did it do stuff? Oy vey.
It did not.
Loading. Impatience.
It did not do things. Now it did, but it did
22?
things. Saturday to Saturday.
God, I don't like how they have these off sync. Or that it does that. Oh, February is the short month. Very nice.
It's the last...
Alright, so Mateo, tell us what's on this list. I have no brain capacity because we're like sushi comad.
C&A, because there's a special dividend. They have the normal dividend of 48 cents and a special dividend of $2 right there.
Oh yeah, look at that. 3M and O. C and A.
Mm-hmm.
Man, that's confusing for my brain. CNA. Canana. C N.
Always want to, like, if you see a special dividend, it's nice to pick it up, especially if it's paid at the same time as a normal dividend is, because you're getting more money.
Right. But they do drop the price of the dividend. I don't know if the O dividends are taken into factor on that. I assume they would be.
DX.
Okay.
Didn't we look at Meggie last
I can't remember.
month?
I feel like we did.
We'll put it on there and we'll look at it again.
Meggie? M-E-G-I?
M-E-G-I.
Meggie.
Meggie? Meggie? I don't... However you want
Who cares? OGN?
to... No, that's trash. Stay away from that one. Stay far, far away from that one.
Did that one die?
Yeah, that one used to be 30 cents and they cut it down to 2 cents. So...
Oh, no Gyno. Gyno must not be productive work. Seaboard. Trox? I'm sorry, that's hilarious. Trox?
GSL.
GSL. J&J?
GSL and HR.
GSL. HR? Nobody likes HR. Skyworks?
Yes, Skyworks.
Skyworks. SKWS.
SWKS.
WKS.
Yeah.
I knew what it was. Paxney? Go out of here. Nobody cares. Tosco. Ava Brasnish.
Hercules.
HTGC. Ooh, they have an O as well.
Yeah, that's their 7 cent dividend. They just released a statement that they're going to pay 28 cents for the year. So every quarter you're getting a 7 cent extra dividend.
Ooh la la. Are we still in them? Or are we sellers?
You know, we're going to be in that forever, probably.
I think I confused that with other things. HRZN maybe?
HRZ is kind of... Well, there's Sun, SON. That's a good one.
Son.
Yeah.
Are you tired? You're mumbly.
I'm tired. It's food coma.
Food coma, dude. All you can eat sushi.
It's PGI, but it doesn't pay enough.
Does that mean yes or no?
No. That's an other for that Tandy leather.
Tandy leather. Are we even going to have 10 on this one?
Yeah, we should. Because the last of the month is Friday, so there's going to be a whole shitload on Friday. There's
But-
that CGNX. Interesting. If you don't remember that one, we talked about that one last year. Stop scrolling. We talked about that one last year. We were looking at growth stocks, and CGNX is actually like the eyes for robots. So it was pretty big, and it's already up 100% since we talked about that one last year. That Codenex, or however you say it.
We got in that though, didn't we?
Yeah.
Yeah. So sometimes we get into these ones that don't necessarily have a big dividend because we do little micro.
That was a macro trend because I know robotics is going to be big the next couple of years, and that was the eyes of robots, and that just sounded cool. The eyes of robots. MNR, yeah, that's a good one.
MNR.
What is that? SGA. What the fuck is that?
Saga? I like the name.
I don't like communications stocks. So, no. AGNC.
You don't want to look at it?
No.
AGNC. AG. Alright, here comes the noise, guys.
And AFGC, it looked like.
AFGC?
Yeah, that's a preferred for AFG, and AFG is pretty banging. So yeah, let's look that one up.
Okay.
We're in
AFGC.
AFGE right now, which is preferred for the same company. Because
E? C?
C. Because AFG itself is like $140, $130, and it only pays like a 2% dividend. So like the preferred we're in pays 5, I think. So we're getting double the dividend, and the cost of it's $20. So it's actually something to look into. Because AFG has a really sound business model. So
Confused. Did we just lose stream?
no, just live.
It said it disconnected. Did we lose stream? Why do we always have internet issues when... Is it going? I guess it's still going. I don't know what happened. It just had an error message. Oh, and here comes the bathtub. Oh, this house. Any hoots. Oh my god. Tech challenged people.
Anyway, look at that AIV. I want to see what their normal dividend is for that
You wanna look them up?
Yeah, that
AIV?
$1.45 seems a bit interesting. It's probably a really shitty company, but we'll check it out.
Somehow, I'd probably think so. AIV? Is that what I did? Is that what I did? Just making sure. God. Alright. It is working. I got the clap. Beckley. Bip. Bop. Boop.
Well, those ones are difficult, the Brookfield infrastructure ones, because we don't really know if they're gonna like release the money to them. So like the government, they have a lot of government contracts.
Oh, is that what's happening? Wait, are we back at like a funding issue again?
Well, like a lot of them do the green energy, and we have a regime that doesn't want anything to do with the green energy. So
Oh, okay.
it's a huge pain in the cheeks.
Cardinal Energy.
No,
I don't know what that is.
like you were going way too fast.
Well, none of these have... Why can't you play with the mouse?
Because those preferred shares, like those seem like they should be investigated if preferred, but I never heard of Care Cloud.
I was going on the whole 5-letter. You usually nix it.
Well, that's when they have this. Sometimes they're preferreds.
This is why you shouldn't be so 5-letter discriminant.
Yeah.
Or tell me that you're 5-letter discriminant.
DNP I like.
D.
Dow. So do DNP and Dow.
DNP and the Dowsy. DNP. D-O dubs. Right. Earn.
EFC. EPR.
EFC EPR.
Yeah.
Okay. What else we got? I feel like sushi was a bad idea.
Sushi was a great idea. This is always a fun one to look up. But like,
Fatback?
it's the First Bank of Alaska because it pays a huge dividend, and then that 5% should just
Holy
entice
crap.
you. But then $4 and 5% means this thing has to be like hundreds of dollars, so we won't look that up. FLNG, that's a natural gas one. So do FLNG.
I was so hoping this list was going to be short.
It's the last day of the month.
T-Rod.
Oh, that one has to be like $1. Look at that, 7 cents to 6%.
Mm-hmm.
This one's a horrible one. Never invest in this one. This is a yield trap right here. ORC.
What makes it a yield trap versus like the high yielders?
Because all it does is go down. The high yielders don't. Look, the ETFs might go down, but like the actual stocks, they sometimes will stabilize and not just go down, not a straight sideways. This one's literally just a straight shot down.
Mm.
That's what hurts on me right now. I've been doing some training on a indoor bike.
I'm surprised that bike's even giving you quad pain. It's one of the old geriatric ones.
Yeah, so SCM. And that looks like it's it. SCM, and we'll
Yay!
start research.
SCM. SCM. Cool. So we have, I don't know how many. 18.
18.
CNA. All right.
So, why do you keep going in there?
Because I have to switch it back to see the thing. Okay, CNA. CNA. All right.
Remember to turn your Caplex off whenever.
Yes, yes. Good call.
So that one has a nice share price, does it?
I don't know. Does it? Do you think $50 is a nice share price?
That's a really nice chart, yeah. It seems like it's the upward swing right
Probably
now.
looks better on the 1 year.
No,
Band trading?
that's really good. It's been band trading since 2024. Looks like it's at a peak, though, if I had to speculate. And it'll probably revert back to the main down here in the next, however, let's look at
LSEG?
2767. Does that say 2767?
Yes.
Holy shit! I've never
See
seen
one that far down?
Yeah.
How's the current target price that low? That's crazy. They planning a stock split we don't know about?
So they raised their dividend because it was 46, and now it's up to 48. So that's interesting. That's good. Covers its dividend. Covers its dividend. Covers its dividend. Oh, I'm kind of confused. It only has 2.9 billion.
I wonder if it's a typo.
15 billion. We're gonna have to Google that one. See like why the CNA
Yahoo?
target price or whatever.
Yahoo?
Yeah.
Yahoo? CNA.
We're gonna have to Yahoo that.
I wonder if that's just like a typo or something.
We'll have to do a deeper research on the company. That's what it sounds like.
Oh look, Meta to deploy a whole bunch of chips. With NVIDIA.
It's supposed to just. The current year is -7. Next quarter is -13. Okay. That explains some of it.
Potentially. Yeah, so that's way different than the other one. 43.
Still overvalued. So now what you have two options here. You can buy. You can get into it knowing that it's overvalued because you're getting $2.48 in dividends. So that would drop your cost basis down to 47-ish around there. Or you can wait until it goes ex-dividend for the $2 because it'll be at 47, which is more in line with what they're saying. I don't know why this says 27. I couldn't tell you. Do we have any target prices here?
It said 43 on Yahoo, not 47.
That's what I'm saying. That's more like, so 47 is more in line with the 43 than this $27. Yeah, this is overvalued. But I just knew that looking at the chart. You see that every time it got above like $42, it shot down.
Yeah, massive resistance point.
And it shot down. So yeah,
that's the highest point on the 5-year, right? Like it's near its toppity.
Yeah.
Kind of, yeah.
It goes at the whole 5-year chart. It just literally hits this spot right here and goes down. What is that? 49, 48, 49, 50. Then it goes down. Yeah, overvalued. So we'll get rid of that one.
Okay. But you could put that one on the watch list if it does drop into one of those crevices. Delete. DX.
That's an interesting. That's LSEG was that.
Yeah, that's weird that's that far
Redonkulous.
over. Alright, do your thing. Since I apparently had problems scrolling to your sufficiency.
So DX's chart looks pretty good the last few years. It looked better here. Or here, but whatever. And this one's actually going to be affected by interest rates coming down because it's a mortgage REIT, so they buy their debt and they whatever. So 1510. So yeah, I think I have a fair value of 17 for this one in my notes. 17 cents a month. It's not covered. 17 a month, right? Yeah, so that would be 34.51. It's not projected to cover that any quarter, but it hasn't been covering it. But that's fuck. We have to look at the.
What? You're mumbling. Nobody knows what you're thinking.
We have to look up. Type in DXNII.
DXNII.
Core projection for 2026.
Okay. What's that say?
Because because it's a mortgage rate, it basically you have to look at the NII to get a better understanding.
What, it's confusing like it is?
Yeah, the NII is different than the earnings per share. Okay.
2025.
What the fuck, dude? I don't understand how.
It's a whole bunch of acronyms. It's trying to like assume you misspelled.
$2.49.
Okay, what does that mean?
17. So what's 17 times 10 to $1.70 plus 34? So 204. So it covered its dividend by plenty. Why is it? Okay, so I think it's good. All right.
You think it's good?
Yeah.
You think it can be on the list?
Yeah, it's on. We actually hold this in the retirement account. And I forgot about the NII because I just assumed it was regular stock, and then I remembered it's a mortgage REIT. The mortgage REITs have different criteria than the EPS, so.
Okay. Do tell.
Well, the NII is much higher than the EPS. If you look at the EPS, it's like it doesn't say it's going to. EPS is going to cover the dividend one time in 4 quarters, and it's not actually accurate. The NII more than covers it.
Okay.
So what they do with the mortgage
So
REITs, what they
misleading.
do is they basically buy up mortgage debts and then they make money off that, and that's why we're using the net interest income as opposed to the EPS.
Okay.
Does that make sense?
Yeah, I think it makes
Because
sense.
they're making interest off of the loans.
Damn it. I did that thing again. I can never remember to look at the ex-div date. Because I always forget where the hell it even is. Oh, 23rd? Is that it? 223?
223.
223.
Look up the
Yes.
compared to its peers. Por favor.
Por favore. No.
This one may or may not show up. Okay, it does.
1488. I was going to say, it better show up.
That one's new because I used to have to look this one up on a different site because mortgage REITs for whatever reason didn't show up in Schwab whenever you clicked on
Maggie.
MEGI. I'm pretty sure this
Oh.
one.
Yeah, the comment. The AI couple.
I would be so much.
How
better.
do we know you're not
I'd
AI?
be so much better looking if I was AI.
That's such a valid statement.
And I'd have a swimsuit bod.
Swimsuit bod. Oh my god, that makes me think of those costumes where they have like the abs and the thing.
They're If you've listened to us before, we've talked about Zim, and I just thought of that because I saw the ticker up top. Scroll up top once.
Zim.
Yeah, Zim right there. That's a shipping company that today they basically announced that they're being bought up by a private company at $35 a share. So if you listened to us previously and you're in Zim, you need to get out at some point because there's no guarantee that the actual merger or private takeover, however you want to phrase it, will take effect. And there's no guarantee 35 is the max, but there's a lot of risk associated because if the regulations come through that they can't do the merger or the takeover, then the price will shoot back to where it should be. So if you can get out at like $28, $29, $30, you might want to sell at least half your shares in that company just to lock in that price as opposed to it falling if something goes bad. Anyway.
Okay. Maggie. Sidebar over.
This is the closing the fund. You see the top right corner there?
Yeah, Morningstar. So that means I go the whole way to the bottom.
Looks over.
Are we skipping the chart?
Looks overvalued compared on the chart, but the chart looks pretty good on the 5-year. I like where that's at.
I mean, it might not be overvalued then. Giving it all sorts of sass. Negative 8.48, negative 11, and negative 11.
So it's fair value. Okay.
Okay. So.
Go back to the year chart one so I can get a better.
Idea.
Oh yeah, it's overvalued, but it's fair value. What is it now? 15.35. Fuck, I wouldn't buy it more than like 14.50.
Move to the bottom of the list.
Yeah, it was competing for the last place.
Am I putting it on, or are we just like moving it down?
Oh no, fill it in because we got to go by the data. We can't go by like how I feel about the chart. The data says it's fair valued.
Damn. I was hoping. Bien mucho something.
You do have a nice dividend cushion.
Wait, is
here.
it 9.73?
Yeah, 9.73. Nice dividend cushion of about 10%. So if it were to fall to say 14.50, you'd still be making money in 2025 as long as it carried on its trajectory of trading sideways.
I don't know. What am I missing?
The
Is there a
price? No, it's
That's
closing
just the
the
price.
fund.
535, 1535. I'm whiffing. Obviously.
I would do 15.50 and then make a note so I can write that up.
About what?
It should be 14.50, but according to the historical discount, it's fair valued.
Oh, I'm writing fair valued in here.
Yeah.
23. Okay.
GSL.
GSL.
This is another boat stock. Oh, that's interesting. I probably should have waited to segue Zim when we were talking about GSL.
I was gonna say, is it just because it popped up over there?
Yeah, because I saw it up top and I wasn't sure if we
jumped on the boat. You didn't know this was a marine one. That's funny.
GSL has a lot of preferred stocks, but that seems like really overvalued.
Holy crap! That chart is hauling. What is going on with this?
Must
be making some marine dollars. 37, and it's at.
It's overvalued.
38.
Overvalued, but let's look. 62.50 covers that by a lot. Holy crap!
This thing was making a crap ton of money. 53. Whoa. Oh. Those assets.
Its revenues increased substantially coming out of COVID as well. Just because, go back to 2/17/2020. Is that today?
What are you talking about?
It hit its 52-week high today, but that could be because of there's like some problems with the waters over there because of foreign policy, so that could come down a little bit. As now it's overvalued, so we're not going to put on the list, but this is one to put on your watch list. Because I do think this one could come back down once there's peace in the waters over by Iran.
Irania. Okay, so deleting?
Yes.
Okay. H of the R.
So this is another one of those REITs. We have to be careful.
Of?
Just it's valued differently. And that one looks high as shit as well. 1910.
1910 versus 1853.
So it's about fair value, but it looks like it's at the. Let's go back to the 3. Looks like it's about at the peak where it generally drops. Is that support? I don't know the technical terms.
No, that's resistance.
Where's the support?
Support's the bottom one.
Okay.
Like that's a support line right there. 1250-ish or whatever. But there's more likely around whatever that price is.
I'm pretty sure this is overvalued, but let's look. Let's check it out.
We just did look at it.
So it dropped its dividend. It cut its dividend by a lot, 7 cents. When it's 31 cents, is 25% around there. Looks like its earnings can't afford its dividend.
Oh wow.
But again, it's a REIT, so it's going to be based off of net interest income. Yeah, get rid of it.
Negative 21 profit margin. No, thank you. Bye-bye. HR. Nobody likes you. Skyworks. SWK. That's not a K. Oh, that's not a K either. SWKS. God, I really do need to get my keys fixed.
This is one that we talked about last year, and then again in December when we picked up a bunch of shares on it. It makes too much money to be down that far. I understand that the Apple contracts were canceled, but that was only 25% of its revenue, and it's dropped by 40%, and it just did announce a merger with Qorvo. Is that how you say it? Qorvo?
I don't know.
It's in the notes down there.
Okay. Shit. Was that 12 or 16? Got me all discombobulated. 16.
62. Where do you get 12 at?
Hold on. 7202. I don't know.
What are you looking at?
Oh, 62. Is that what I did? I transposed something.
What? Yeah, Qorvo, they're trying to do a merger. If that goes through, that 25% revenue lost by Apple might be cut in half. They might make 13 to 20% just off that merger alone. So this is one to watch, but it's pretty good for a tech stock, semiconductor stock that you can make
oodles at some point.
Some bank back, because what is that? That's 15% price appreciation if it hits its 72 price target. Plus you're collecting 5%, 4.5%. Yeah, that's pretty good. Profit margin might be a little weak, but the profit margin I'm not concerned with because they're going to be making up a lot of that. They can covers it.
So they're coming back? Non-gap was hit, right? 71, yep. Oh. 973 in the plus.
And their debt, they did cut their debt down a lot coming out of COVID.
Good for them.
And their revenues went down a lot as well, but that's because of phasing out stuff. But the revenue, I'm not entirely worried about because of the new merger. I don't think it's obviously Corvo's not the same as Apple, but they're wheeling and dealing.
As they should be. We like them. Damn it, I missed the PE ratio as a normal.
And I just encountered, like, so I'm in a sidebar here while she's typing this in. I was just looking up, I read a report yesterday about Build-A-Bear Workshop. And we held Build-A-Bear Workshop in 2019. We had that when it was like $8 a share, $6 a share, somewhere around there. And I got out of it because it didn't pay a dividend. I was like, I don't really want to do growth stocks. Well, it has it went from $8 up to $60.
I hate you sometimes.
And now it's starting to pay. It's like the last 3 quarters it paid a dividend. So that's a
that's a really big kick in the taint.
That's a whoopsie that's been years in the making.
Right. So that's gone on the list for the end of this year, I imagine. Yeah. It's not as bad as Rocket Lab yet.
Nothing's as bad as Rocket Lab. I've never.
Freaking Rocket Lab. I don't even understand. Is it still just going up?
It's not trading sideways, like, because a lot of things are trading sideways now, but
well, at least it's not just still. God, why can I not remember the last digit of this number? 5067. Is it 5067? Is it 79? Where the hell did I get 67?
Why are you having problems?
I don't know. Because I'm like sushi comed. I don't know. Okay, I'm not good when I eat, apparently. HTGC.
Yeah, we went and got sushi at the best sushi place around here. It's all you can eat sushi for like $29.
And it's like specialty rolls.
They're like huge rolls too. Like, so we got a few of those, and now we're
fat,
lightheaded from all the good food. Yeah, this is on the list, so you might as well just start typing.
Okay. 1584. I figured it would be because it's Hercules.
Well, it's just like it went through, like, what they're doing is they're punishing all the BDCs together, and some of the BDCs are way better than other ones, and Hercules is way better than most BDCs.
Wow, look at that volume spike and falling off a cliff there.
But the good thing about Hercules, if you're not in it,
avoid. I'm sorry, that's hilarious.
If you're not in it, go back to the chart once. I guess it was the 3-year. Do you see? 5-year maybe, I don't know, like one of them was perfect. Yeah, you can see, like, right there, you can see when it becomes overvalued.
So it just hit a resistance point.
All these spikes up top here.
Yeah.
So, like, once it gets up around $20, you just turn the drip off, collect cash, and then wait for it to go back down, because it literally just trades in like
and then turn the drip on, and then turn it off, and then turn it off.
This is a perfect, like, money-making stock if you're interested in, making money.
2031. The hell's this at? 2031.
And what they do is they lend out money to the mid companies. A lot of them are life sciences. It's 47 cents, but
why is it 47?
Because it's 40 plus a special.
Oh, 47.
Yeah, and then we just mentioned that previously, that they just released letters that every quarter you're getting 7 cents extra, so it's going to be 47 cents dividend.
Interesting. 225.
Why is he so fucking loud?
I don't know. We're introverts, and he's super introvert, and he, like, literally has been dying.
You see, like, how, like, because it's a BDC, it's required to pay 90% of its net profit or profits before net. I forget how it works, but see how their dividends right around their EPS every freaking quarter, and then it's projected to be 47 for 2026. This will be right around its dividend the entire year. So you're not getting dividend raise with this one, you're just accumulating shares. So that's the trade-off here, because it's not a dividend growth stock, it's just accumulate as many shares as possible. And, like, we paid this one off in the Van Life portfolio. We paid this one off in 2024. We held it for 3 years, and we actually recovered we recouped our initial investment.
So it's all profit, baby.
Yeah, so we have, like, almost $5,000 in Hercules. That's all just net profit.
23.15. 23.15. Anymore.
You hear me talk a lot about Trinity Capital. Well, this is another one that all we do is make money on Hercules.
It's very nice.
Now, I know some of the income investors out there say like it's one of their core holdings. I'm thinking the Dividend Hunter, and there's another one I know that is core holdings, Hercules Capital. This is one we just picked up in December, and we're already up 40-some% in this one. All the people that were talking shit in the live stream, we did this, but well, this one go to year to date.
What do you mean talking shit in the live stream?
They were talking shit. They said they wanted to short what we bought.
I don't remember this. Was I hallucinating?
Probably.
Where do you want me to go? What is that?
Year to date. Bam.
Pow, right in the kiss.
Literally just went straight up since we got into it. So I'm in a conundrum now because do I
So? Oh my god, look at that.
take some profits because
Wow.
damn, that's a pretty big run
That
up in like a month.
how much oil was suppressed.
It's not oil, it's
Whatever.
paper. I think it's paper.
Sunoco.
It's
Sonoco.
Yeah, it's packaging.
God, I get those two confused. I even transposed the last thing.
And it's like
the hell happened with paper?
This is like boxes and bubble wrap and shit, and it's just shot straight up.
It's weird.
I think it's
Overvalued? What did they have thought on?
I think it's overvalued.
53.75.
I have a better note. Where's my? I think I ran the EPS and hold on.
Run your thing. 53, 410.
I created a new
Yes.
spreadsheet because that's what nerds do. In my spreadsheet, I have Sunoco is its fair value based on EPS and growth. Fair value $76.11. So that's what we're gonna put in for its buy up to point is 70.
70.
Yeah.
Jesus. You've got some competencies. Non-gap was good. 53.
It's a dividend grower. It's grown its dividend by, I think, it's an aristocrat. It might be a king.
1.48 profit margin.
Yeah, well.
Can't have it all. Yeah.
Yeah.
Do you want to look at any of this?
I looked at all that. But you could show it to them. Yeah, it went up. Like you see, the debt doubled between 2023.
Look at that asset thing.
2023 and 2024. The debt doubled. I'm sure they did a acquisition in 2024.
It had to. Look at that. Assets went up. Craziness.
The debt doubled.
That means the income.
So that means
the
the revenue is going to increase in 25 or 26. So.
Should. If it doesn't, we have a problem. But it should. I don't know who buys stuff to not go up.
Did you get the PE?
No, that's what I was looking for. And I missed it 3 times. 951.
I have to do this by myself, apparently.
You keep saying this, but obviously you like to watch me struggle.
I'm trying to see you learn how to do this, so if I die, we're good.
Oh, you're so freaking... You have oh my god, this man has so many dreams about people dying and all sorts of crazy. Is that really what that is?
Yeah, we're gonna have to get a better priced earnings than that. You're gonna have to go into the PE ratio.
Is that even giving it things out? What is it, PE ratio?
PE ratio, yeah. By sector.
By sector.
So it's like...
That one?
Yeah, full ratio. But I mean, we can do this one.
No.
Go do that one. That's fine.
Why? Paper?
Containers, packaging. I don't know. What the hell it's under.
Can't we look? Containers and packaging. So it should be under a C.
Or P.
Paper, forest, packaging, and container. Oh, I hate when I do that. Number of firms, money, current PE. Is it current?
What the current priced earnings, yeah.
Okay, packaging and container. 6051?
6051, okay. So that is a high as shit. Priced earnings. Means you're paying $60.51 for every dollar of earning. Holy crap. That doesn't seem very wise. Now we were in M&R in 2023. We made it 18 to 25% or around there. I forget exactly. And they I didn't like they have I believe they have a variable dividend, but that chart looks good. It just bounced off its low.
Right? Do you see that? It's a heck of a momentum-y thing going up too.
Yeah, but is this oil and gas or is this minerals? I forget. You have to see what the company profile is. $20 is the
That? No. That. Upstream oil and gas. Look.
Ew. Upstream. Ooh.
Upstream.
If you're not familiar with what we're talking about, whenever if you think of oil as a continuous thing, there's upstream, which is they explore for it, they dig for it, they use the wells for it. Then you have the midstream, where normally the midstream is when the people find it, they ship it to the midstream, who refines it and then stores it and then transports it to the end people, like the gas stations. So upstreams are way more risky than midstreams.
Okay, so big moves up there in revenue and stuff. That is huge. But that didn't really go up that much by comparison from that jump. So that's interesting. That's good. But they don't make their gappage.
What was the dividend?
53?
53. What was the projected? 26, 33. So yeah, get rid of it. I don't like it.
Don't like it.
You can't afford the dividends. There'll be a dividend cut, and then the price will crater, and it's just
setting yourself up for too much risk. AGNC. That one's probably on the list.
Upstream is risky to begin with, and when they can't meet their dividend, then you're just begging to lose 20% before you can get out of it.
Yeah, don't sign up to be a bag holder. Bag holder?
This is another mortgage REIT. We hold this one in the van life portfolio. I don't think I have it in the retirement.
YX close at 241 Friday. What is that ticker?
PLYX.
Do you want me to look it up?
Look it up. I've never heard of it.
PLYX. Oh,
Pharmaceuticals.
oh, this is a brand new one. Where's that chart? Just stupid.
Never heard of PLYX.
Yeah, but it looks new. What the hell's the inception date of this thing? No data.
So it just came out.
What is this thing? Therapeutics, clinical storage, biotech.
Well, that's why a lot of people
Small
actually
molecule
buy.
and gene therapy
They
treatments.
invest in the biomeds.
If it's got stem cells, I'm all for it.
Because when they get news of a trial, the price sometimes will shoot up. And then if the trial passes, the shares will sometimes shoot up. But whenever
they fail one,
whenever the FDA approves something, the prices skyrocket. That's why people love these kind of little pharmaceutical stocks.
right? So, I believe it was a direct uplisting, 15 days since about. Yep, that looks about right based on what we're seeing.
Yeah, so that's might be one to watch.
So what do you do with new ones? I know you sometimes get into stuff because SoFi and I think PLTY? I don't know. You get into penny stocks all the time.
I got into Palantir when it was young, and I got into SoFi, but I still let them establish. Whenever they when things IPO or are new listed, there's too much volatility.
Right.
Sometimes you can negate that because, if it's an IPO, for example, they actually put a moratorium when, the people that own the stock can't sell it for so long, so the price won't crater until they can sell it.
Mm-hmm.
But in the meantime, it's hoping that it actually establishes a base so that if and when they sell their shares, it won't crater because there's people invested in it. I normally, a newer stock, if it's something that piques my interest, I'll normally put on my watch list for a quarter or two, and then if it's still doing what I want it to do, I'll take a deeper research into it. But once I determine it's brand new, I literally just put it on the watch list if I like the business. If I don't, then I just ignore it. I'll forget about it, and then 3 years later, I'm like, oh, I probably should have kept up on that one.
There was one recently that you did that with, wasn't there? 12.
There's more than one.
68. It sounds like you need a better system.
Well, we're dividend income. We're income investors.
I know, but sometimes
the growth stocks are not my bag. Like sometimes I'll find some, but like it's not what I'm screening and researching for. So like I don't. No, I'm just not. I have ideas what I think. Like the robot eyes one, the CG and X. I thought that would be a good one, and that one did do all right. And I was in ASTS, pounding the table on ASTS when it was like $20 a share.
And what was that other one that turned into RX, and then whatever happened with that?
That was
brain dead.
I don't know. I forget.
EXAI.
EXAI. That was like that one didn't do anything. It was like fairly new, and then it RX took it over, and it just pretty much traded sideways. Now it's just down.
Yeah, I feel like a lot of the medical ones are really. I don't know why that's like. I feel like that's kind of like tech too. All over the place. So we know AGNC's on the list, right?
Yes.
Okay, I made a good assumption. 794, 749.
749, 1488, because it's the same as
1488 what?
DX 1488.
Oh. You should have said the versus. AFCG.
No, AFCG, like I was mentioning this when we looked at this one, AFGs are really good. Just type in AFG so they can see it's a really good insurance company.
Okay, we shall do that. AFG.
And then we'll get to the C. We actually hold the preferred E. I think it actually yields more than the AF.
What is that, a preferred or something?
Yeah. But like $130 insurance company that drops special dividends, and like because of the variable dividend, I didn't feel comfortable holding an income account, because what if we need income and we can't like rely on a structured dividend payment? So I just, once I saw they had a couple preferreds, I researched the preferreds.
I love when they say
but it's a really good company. Like the financials are all awesome, and
140 is the target price. 128.
And we held AFG in the retirement account for about a year, and then like when I was running the numbers, I was only making $26 to $28 a quarter, so like it wasn't actually benefiting me any, you know.
Whoa, look at that.
It's a really, like I said, it's a really good insurance company. So if you have lots of money and you don't mind like
paying that much for a share,
the dividend, go back down to the dividend and see how the dividend's all over the damn place. So you really can't rely on it for like your monthly bills. Whereas if you do AFCG, I guess is the one we're looking at. Is that what AFGC?
AFGC?
Yeah.
Is it AFGC? Yeah, AFGC.
I'm pretty sure this is a preferred for AFG, and you're getting 5%, and it's.
Well, don't we need the data from the other one to put it into the thing?
We will. So this one's undervalued. So like the preferred share of 25, you see over there the face mounted issue $25. So that means this one is $5, 23% ish around there, 23% undervalued. And you know AFG can afford it.
They had a lot of money.
So these are like some of my favorite preferreds, and you're getting 6.67% on a preferred that's 20-some% undervalued. And what'll happen with this generally, like there's three things that happen with preferreds for the most part. First thing is the company calls it back, and when they do that, you're getting $25 per share. That's why you don't want to pay more than $25 if its face value is $25. Some have $50, and then you can pay. They don't pay over $50 if the face value is $50. The second thing that will happen is it'll go to zero. Like the company will run into problems, because sometimes preferreds are like a precursor to the company has problems, and they won't have any money, so they'll suspend the dividend, like QVGCP, whatever the hell it is, the one we have, where they suspended the dividend and everything, and now it's basically the parent company's at like $3 a share, so that one's going to zero. And the third thing that'll happen is that they'll just keep going. Like they don't have to call them back; they can keep paying as long as they want to keep paying. So long as you get it under $25, and say it just 10 years, or they just keep paying you whatever it was, 32 cents or whatever it was.
Do I do the parent?
Yep.
1183.
It doesn't matter, but yeah, because it's a preferred, you just want to verify that.
1183.
So if they never call this back for 10 years, you're getting 32 cents, which was at $64.28 per year per share on a $19 and 20-cent investment.
Mm-hmm.
If they call it back, you're getting $25 per share for however many shares you owe. Plus plus the dividend you collected while you held the preferreds. Like preferreds are like not talked about enough when it comes to income.
I honestly never even heard them until you started talking about them. 1071.
For some reason, like and see how that one's overvalued. Again, it doesn't matter because you have the preferred share. Who cares if the company's overvalued compared to its peers? The share price of AFG has no effect on the AFGC.
No.
You just want to make sure that they have money.
Jesus Christ.
I forgot what I was saying.
I know. That's why I'm laughing.
It's not funny.
I have to laugh or I'm going to cry.
So this one's shit.
Where'd you even get that from?
I can just tell what the
Oh,
price.
850, 584.
Tell what the price is. I'm not liking this one. Aren't they paying like a $2 dividend?
I don't know. If they are, then the thing's going to drop by a hell of a lot when it happens.
And the LSEG price is a lot.
How
$11.50.
was it? Really? 1150.
It's a 100% gain.
What happened there?
We're going to show more.
Is this the one you stuck on here to just check it out?
Yeah. So the regular dividend on the
So they didn't pay
27th
dividends.
is $1.45.
Oh, they just do specials. Ah.
So when they have money, they pay dividends. So let's look at their financials now because this one
That would be
confuses me.
earnings.
It's a REIT, so we have to look at something different than
Still.
EPS. It's profit margin.
Sketchy. I feel lots of red flags here.
Debt's gone up. Revenue's gone up. I get rid of it. I mean, that's one that was, if you have an inkling to research that one, you can, because that seems, but that to me sounds too good to be true. You're getting 50-some% dividend on a $5 REIT. I don't know. Do we just yell? I'm like, shut the fuck up.
I don't know.
Here we
Like,
go.
why do they have to congregate right behind where we're at?
A utility closed-ended fund.
A couple more days.
I think this one's overvalued, but we shall see. Let's see what the data tells us. Almost $4 billion on assets under management. Holy crap! This is a big utility closing the fund.
Yeah, it is.
It's a monthly pay.
Okay, what do we got here?
Premium, but
$634.
This is why hopefully this is where we can educate them about something else. Oh my god, I love these because like whenever you research closed-ended funds, like a lot of people will omit ones that trade at a premium because they're like, oh, why would I pay? You're paying $1, $1.02 for $1 worth of shares because it's 2% overvalued. But if you actually compare it to itself, it's actually at a 10 to 12% discount compared to where it's been. When was the inception date of this one?
Oh, that's a good question. Inception date was
19
87.
So this one has, was that 13th? So this one almost has 40 years of data, and it's always so its historical data is it trades at a 14% premium. So 1.26 is severely undervalued for this one.
Mm-hmm. Makes a list?
Yeah.
Oh yeah, look at that.
I was waiting for us to have one of those because like if you do any like cursory research on closed-ended funds and it says, well, if it trades for a premium, you don't want it because you're paying more than you should. But like this one, it actually is severely undervalued, and you're still technically buying it at a premium even though you're getting it.
How much did you say was undervalued?
10%.
10%. Okay.
This one has a lot of assets under management. They're all energy and utilities, so this one's pretty sick.
7 cents, 27th. Okay. What did I say? 27. I don't remember what that was. 7 something. 747.
747, like the airplanes.
Oh, yes. I was going to say, I don't know what you're talking about.
It's 10% undervalued. You don't have to do it. The other one doesn't matter.
Okay. 10% undervalued. Damn it. Got extra spaces in places. They shouldn't be. So you want me to do 10% of that, or are you giving me a number?
211.
Okay. Dow.
I think Dow might be a dividend grower.
Really?
We'll see here in a second.
Really? The Dow.
Chemicals. I'm all for chemicals. Well, I've invested in, not playing with. Oh, that chart is, wow. Okay. Looks like it may have.
There's so many that have done this little dippy dip
might have
thing.
bottomed out. I see a little hooky there at the bottom.
There's a lot of stocks that have that hook. That seems like a macro.
Interesting. Okay.
What was this thing? 3142. CL-SEG. 28.
Okay.
Not looking good there.
Well, they did cut this, so they're not a dividend grower. They cut their dividend in half. Holy shit.
Yeah, 35. Well, they've had negative.
That's what they're projecting for 26.
Ooh.
So 26 is projected to be a bad year. Yeah, get rid of that one. That one's trash.
Not safe.
That's a trash panda.
Trash panda.
I get asked questions about this one. I think
EFC?
probably the second most questions I get asked by people.
EFC?
Yeah.
Really?
Yeah.
Hmm.
Because like you'll see here in a minute. Because like you see that's a perfect band.
Mm-hmm.
That's not. That's okay, but like that 1 year is a perfect band, and people are like, "Well, what do you think? Should I buy it now?" I go now because looking at that band.
Avoid. Buy.
Looking at that band, it looks like it's at the bottom about to go up about 5 to 7%.
1463, 1282. Yes'm. Ooh, we do like to see.
I'm going to show more because I don't know if they go.
Are they variable, you mean?
Is it variable or is it consistent? 8.
So it looks cyclical.
This is 13. That was 8 plus 5. That was 13. That was 13. So they raised their dividend from 13 to whatever, 14. Is that what that is now?
Are those quarterly?
It's monthly.
What the hell are you seeing 13?
8
Saw
plus
that.
5.
Oh. Never mind. Regular and extra. I can't do maths. I thought it said 80 and 40.
So look, what does Sneak over here? It says regular is 13 now. And so it looks like it raised its dividend from
13 to 13?
No, it's still 13. Never mind. So it didn't raise its dividend. This adds up to 13, so it's been consistent. It just didn't do this.
Yeah, consolidated.
Whatever
It
the
did
fuck
it as two separate things.
That nonsense is.
Okay, 53.
13 and 13 and 13 is 39, so it's going to cover. Covered.
Close.
Covered. Going to cover. Yeah. It's an M-REIT, so we'd have to like dig into the other stuff, but
Passes the first cursor test.
I can just tell by this one here that we maybe, if some crazy shit happens like we had with the tariffs down here, but generally speaking, it bottoms out right around $12, and it hit that and it bounced up. So like this one's on its way back up to probably $13.50 to $14. So if you wanted to, you could do like just band trading on this one and make, I don't know, what is that? What's 13?
Or have a perfect turn on for your drip allocation.
Yeah, you could just time this one. It's been pretty consistent, so it's on the list. Put her on the list.
Okay. I already came to that conclusion, Babbling McGee. Babbling Brook.
Why are you always giving me shit?
That's what I'm here for.
AI is not supposed to talk back.
I don't know, my AI blah, 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 talks back pretty hard. Oh my god. That was hilarious. Oh my god. Are the rest of these 227? It's 27th Friday?
27th Friday. It's the last day of the month.
Oh, good. Do we have 10?
Probably.
Make sure you can't cut anymore. That is 12. So we at least need one more out of those three.
Should be able to.
EPR?
I know EPR is good.
Yeah,
I know
EPR's.
I think Fling's pretty good too.
Fling?
FLNG, the natural gas one.
Ah. What the fuck is Fling? 2375.
like we mentioned with DX and like we mentioned with AG&C, like just because it's a mortgage REIT, they should flourish in the environment we're about to have, like for the next, I don't know, 16 to 20 months. In theory, I can't say with any certainty that.
Unless things change ridiculously,
it's the same as the DX and the other one.
Yeah. Valuation 1480. Oh, is that what you meant by what you just said?
Yes.
You could say PE before you say things like that because I wasn't registering that.
Well, my AI needs to be smarter.
I'm too busy quantum computing other things.
EPR. We were in this one forever, and we actually sold this one. I want to say 70% profit. It got too pricey for me, and like I didn't like it anymore. But we also bought it during the during COVID when everyone was just.
So you lost 25%?
No, we gained like 70% in this one.
Oh.
Bought it in COVID, and then I was like, we'll just hold this bitch. We had some good time and then not so good time, but it's okay. Looks overvalued.
According to that. Doesn't mean it's right.
But it's a monthly payer. It pays you 30 cents a month.
$29.50.
So can't afford it. But because it's a REIT, we have to do the NII. So again, that's this fucking crazy shit.
30 and 60.05. 30. Do I need me to look that up?
Yeah, it's kind of important. If it's overvalued, we have to make sure it can cover its dividend because that's the whole reason you're getting into it.
APR.
Stock. NII. 2025.
Based on reports. Blah, 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 blah.
So they're doing free cash flow. So 139, which is ridiculous. Yeah, so it covers its dividend by a lot. 139 a quarter, and its dividend's 90 cents. So yeah, you're good.
Okay, we're good on that one.
Yeah.
Barnas. What am I doing? Profit margins. Ew, what happened there?
They probably bought something. Who knows? One thing I would.
Oh my god, your comments are so funny.
One thing that I would advise people, don't scroll anywhere. One thing I don't know if other brokerages have the capability of doing this, but that's a pretty high number.
Short interest, 518.
Yeah.
Number of short shares. You might want to scroll up a little bit because our face is down a little.
Right here's what I was just looking at. That's a pretty high number of percentage short shares. But it's gone down. It went down by like 1 million. Anyway.
Roaring kitty.
Just a little tidbit there. Because if you look at Palantir's like there's a huge short position in Palantir right now.
Really?
Yeah.
Oh, we just talked about that, didn't we?
Yeah. And this is a specialized REIT, so it's going to have like 100 PE. We'll see.
What does that mean?
These things are like.
Is this accurate, or do we need to look elsewhere?
Casinos and golf courses and shit.
2194.
Wow, that's crazy. All right. Normally not that low. But EPR, like they have like movie theaters. And,
is that why I recognize that?
Golf arcades and like a couple ski resorts. They're pretty sick. That's why we were in it, because they actually like their holdings are really cool. Everyone's like, oh, it's COVID. Nobody's going to ever go to the movies again. It's like, well.
Yeah, right. People were dying to get back to the movie theater.
I think they will. So we took the gamble we made.
So is this one going on the list too, probably?
I don't know.
I know it's a really good company.
You have to look at the data, though. I can't just say, hey, you have to put on the list. No, it looks overvalued. But let's check everything out.
So was the other one.
75. You're getting 12% though. That's only overvalued by. Yeah. Wait a minute. Go back up. Go back up. Go back down.
Go up and go up, go down.
Now this is going to be a cyclical one, I would imagine.
I don't know. Do your mojo magic. Explain things.
Because it's natural gas. Natural gas is usually generally is more transportation of natural gas in the cold months.
Yeah.
But that is steady. No.
You're right.
The debt to revenue is not high enough to justify even paying 2% more for 11% yield.
SCM. Let's see if this one's even on here. SCM.
In my opinion.
Stellus.
I should. Yeah, we were in this one too, like in 2021, I want to say, or 2022. This one bounces all over the fucking place. Too volatile for my liking.
That's been really bad. On the 5-year chart, that's really volatile.
Like, I don't mind like some volatility, but you see some of these like, here's the peak up here, and then there was a huge trough, and then here's a peak, and there's a huge trough. It does this all the time. And I'm pretty sure we're gonna end up down here somewhere at like 9.50, and it'll shoot back up to like $13, and like so this.
Yeah, that's done one of those weird triangle, downward triangle things.
So 13.13. I don't know. They cut their dividend by 2 cents. They can they afford it? 11, so that would be 30.
33-ish.
34. So no. Yes. So like they cut their dividend to like this. I hate when companies do this. Okay, I'm gonna go on a tangent here.
Do it.
They just cut their dividend because the money wasn't like they weren't making enough money to cover the dividend. So why the fuck would they use the data that they cut their dividend from as their new dividend point? They cut their dividend so that it could be covered by last year's data. But the projection for this year is less than last year. So why would you not cut your dividend for this data, not this data?
Oh, so they're not using the right going forward.
They're not using the projected EPS. They're using the reported EPS, and they cut their dividend so they could afford last year's dividend when last year's dividend is not going to be able to afford. Yeah, we're getting rid of this one. So like it's bye-bye.
Okay. Well, bye-bye.
As NSYNC would say, bye.
I think you have 10. Yep, you have 10. So do your magic.
Oh, we got 10. So there's our list for this week.
Let me check comments real quick. No comment days. Back over. Go ahead. Do your magic.
So I like that one.
Ooh, HTGC number 1.
I like that one.
AGNC number 2. 3.
I really like that one, but I think that one. I actually like that one there.
Oh.
You're getting 6% on something that has a guaranteed gain of 20%. So like that's like.
Do heart me some preferreds. I'm actually surprised we don't have more of those.
I think that's a really good list. Holy hell! Hold on a minute.
Well, didn't you say it should be because?
So if you held your money from last week to this week, you're making out because this is a pretty good list. Now you have to be careful because this is a BDC, this is a financial, this is a mortgage REIT, this is a mortgage REIT, this is a mortgage REIT. So you have a lot of financial exposure with this when you like 4 or 5 of them. This is utility that is pretty sick. That actually might go up here. That's one that I'm not like. I think it's about even like fair valued right now at the 56.72. The 70 comes because I actually inputted the growth times the EPS and then did some other stuff. So the 70 is like where I think it'll be in at like 12 to 24 months. But currently, like you're only getting a 4% yield on something that could trade sideways in the 50 to 60 range for months at a time. So if you're comfortable with that, that's cool because it is a dividend grower. How many years? 40 42 years. Okay.
Wow, that's a pretty good
So
streak.
it's an aristocrat. It'll be a king here in the near future. So that all depends what you want, because this is a dividend grower. This has like 12 or 13 years of dividend growth.
About the 9%. Almost 10.
So these are both dividend growers here. The two S's. This is a mortgage REIT. That's a mortgage REIT, and that's a mortgage REIT. So like, which one do you prefer? Because that one, blah blah, 12%, or do you want 12%? I think DX has the most room to run, so I like DX over AT&C. EPR. I like EPR, but I think it's pretty. Like, I think it's fair value. So like, it's the same. Yeah, that's it. Okay.
Okay. There's the list with Tim's brain exposed. I like when you do that. It gives me a clear snapshotty of
Like, if you construct these lists on your own, the first thing that should matter to you is this column here, because that's their ability to pay their dividend. Now, obviously, this one is a closed-end fund, and this is a closed-end fund, so they're not going to have profit margin. So you actually have to make sure you're getting your valuation correct. That's why we do that, where we scroll all the way to the bottom so we can get the historical comparison of its premium to discount ratio, because that's like there's no sure thing in investing, but that's like the closest thing you can get. Like, if it's been, like we said, this one 14 or 16% undervalued for 40 years, and it's currently a 1% or 14% overvalued for like 40 years, and it's currently at 1% overvalued. That means it's about 13% off,
right,
where it normally is. So that's a pretty good indicator. That's probably like 80% confidence that this one's going to go up.
Right.
This fair valued one here, now you're just doing this one because you think it's probably going to trade in the $15 to $16 range, but you're getting a 9.73 dividend. So that's your dividend cushion. Whereas this one, you don't really need a dividend cushion because you know it should go up, and you're getting 7.5% while it does.
I do like when you can get dividends and
so there are
appreciation.
like, that's a pretty like 85 to 90% sure thing that'll go up in 12 months. And this is a pretty sure. This is like 90 to 95% certain that you're not going to lose money in this one if you hold it until it's called back, or you make your money back. Because the parent company AFG makes way too much money and is too big for this to fail. Now, the QVC one that we're having problems with, QVC is a tinier company. It only has like $1 billion. It only has like $1 billion market cap.
Is it still QVCGP?
Yeah, so they suspended the dividend because the parent company wasn't making any money because it's a tiny parent company.
Jesus Christ.
And you see here, like how I say, like there's different prices. This one was $100 at face value. So if they called this one back, they would give you $100 per share. So they'd be calling it back at a 94% loss. So they're not ever going to call this one back.
They're never going to do that.
Even though it matures 2031, that's what I'm saying. So this one will just keep going perpetually, yeah, into the future. What happened? See, it was always doing pretty good. It was in the $30 to $50 range, and then it just fell off a fucking cliff because the parent company is absolute trash.
I really question why you were in this one. I did before.
Paid a lot of money.
Yeah, but how much are we down?
A lot more than we made.
That's
you see,
my
like,
point.
its market cap is only $32 million. So like every time this one has a bad earnings report, or like it loses customers, that greatly affects.
I figured it was only a matter of time before
its ability
this.
to pay out its preferred.
But I imagined that this was.
Whereas.
Oh man.
AFG, I mean, like, I'm not trying to say they're the same.
They're not even close. But this one at least has something to like hang its hat on. QVC is like, if the boomer generation's all dying, the people that were shopping on that are kind of dwindling. So, plus you have the tariff thing and you have a bunch of other stuff, so it's putting strain on multiple sides.
AFG has an $11 billion market cap.
What was the other one?
$38 million with $1 billion assets under management and $8 billion in revenue per year. So like this one is pretty safe. AFG. So go back to my list. So I really like that one. Like that's like, if you're adverse to risk, that'd be like where I would start on this list, and then I would actually put some money in. I put money into line 6 and line 9 if you're worried about risk and capital preservation.
Right.
That's that.
Are you gonna stop making QVC decisions?
No.
No.
Let's take a look and see it next week. See if if you're not enamored with this list, we'll take a look at next week's list real quick.
A listy? Lixies?
See if there's anything that piques the interest on next week's.
But you said this week was pretty good.
This week was really
the hell
good.
out of here, man.
Everything wants your money.
God, everything in ads is so annoying.
It's the first of the month, so it's not going to be as good as the last of the month. That's just
how it works.
How the cookie crumbles, but
that's the way the cookie crumbles.
I see a lot of preferred shares. Holy crap. All right. Yeah, so next week's looks like a lot of low yield, secure.
Wendy's.
And Mickey D's.
Goody.
We might not even get 10 next week. Holy crap. These are trash.
I don't think we should force it. I've kept asking you. PayPal, really.
Wow.
This might be the week we throw THTA and shit on here.
There's ES. That's a decent one at least.
Which one?
ES. Shutterstock is a dividend grower. 6 years or whatever.
It's Shutterstock, really?
Mm-hmm.
Interesting. I can't imagine how that's not getting harmed with AI crap. Although, actually, I could see people wanting real stuff.
I don't know. It's not my...
BlackRock by itself?
No, maybe.
Interesting.
It's probably expensive as crap.
Probably.
There's Kimberly-Clark. That's decent. There's Kraft. I mean, so there's a couple decent ones. We should be able to get 10 out of that list. There's Pepsi. There's Main Street Capital. So there's a couple good ones for next week. And obviously that changes because as earnings come in, they'll announce their dividends, and this list will change before we get to it next week.
Oh, is that what happens?
Yeah.
Okay. And then if we can't get 10, we will add THGA and SBA, SAB. SBAR. The 4 of the right letters? 3. Shush.
You're hopeless.
I'm hopeless.
You better hope I outlive you.
Oh my god, that's so funny. Alright guys, we are going to wrap it up for tonight.
See you guys next week. Any questions, leave them in the comments.
Yep, any questions, any stocks you want evaluated, leave them in the comments.
I really can't evaluate the new
stuff.
The new stuff because it's too new to actually evaluate properly, but
it is what it is.
See you guys next week.
Alright, bye bye.